Welcome back to the Dividend Diplomats YouTube channel. Laney and Bert, you know us by now. We are the Dividend Diplomats. Today we're going to talk to you about what could possibly be a perfect recession-proof stock that's yielding over 3% right now with a double-digit 5-year dividend growth rate.
Smash that subscribe button. Give us a thumbs up. If you haven't caught the last video, we're trying to get to 400 likes. So if that meter's still going, get over there to get some Dividend Diplomat swag, guys. So Bert's got an interesting stock here. A little stock that could be recession proof. And we just said it before this recording of the video. The dividend grows very well when times are great and maybe not so much when times are down, kind of like what we're in right now. Didn't even mean to rhyme right there. So let's just keep that in mind.
We're dropping bars here on the Diplomats YouTube channel. I think that's really what it's all about. But
Mm-hmm.
look, right now, it's all about safety. It's all about figuring out, tuning out the noise of the market and finding those great undervalued dividend stocks. Blaney and I don't own this company that we're going to talk about today, but we're very familiar with their products. We're always watching a lot of their offerings. And quite frankly, they're one of the big ones in their sector. So you know what's going on with this company when it makes headlines.
Oh yeah, yes you do, because they are a beast of a stock, guys. We are talking about the rock is Blackrock. Ticker symbol is BLK, guys. The stock's pretty interesting. They're up 7% in the last 52 weeks, but they're down 7% year to date. Does that sound right, Bert?
Yeah, that sounds exactly right. I had to do a double take as well when we were pulling in some of the numbers from here, especially when you compare it to the overall S&P 500, because BlackRock is obviously the large, massive asset management company. They don't just have 1 trillion. They don't have 2 trillion assets under management. They have over 9 trillion of assets under management. That is a freaking ton of assets under management. I don't know how else to describe it besides it's just a boatload.
Yeah, I mean, they're one of the best and biggest to do it, guys. They're involved in all sorts of asset classes. Bert really brought in a lot of the numbers from their earnings release that they put out here a little bit ago. It's pretty surprising because they have net inflows going into BlackRock of a cool, what is it, $110 billion of asset inflows.
Yep.
Just to get it up to that over 9 trillion in total assets under management.
Yeah, and I think the interesting piece that you caught from the earnings transcript was of the 110 billion, they had 34 billion of bond ETF net inflows, which was over 60% of the total fixed income ETF trading volume.
Wow.
And
Wow.
their earnings release was as of March 31st. So think about what was happening at the end of March as times were going on. It was a crisis in the banking sector. Nobody really knew what was happening. People were pulling money, they were buying treasuries, they were getting into those safe bond funds that were happening. So BlackRock was picking up that momentum at the end of March, and surely that's going to continue here into April. The other piece where they were talking about the net inflows was in their cash management system. They saw a lot of growth in that sector as well as people fled into those money market accounts. So it all kind of makes sense as you're going through.
Yeah, the flight to safety, maybe even some large institutional investors wanted to kind of diversify out of other areas and move it to BlackRock and leave it in some sort of bond or treasury product. Or even maybe, your banking institution, instead of having it in cash, they moved it to their asset management, which happened to be some sort of iShares bond ETF. So BlackRock's like, thank you. We will earn a little bit of a fee. We appreciate that.
Yeah, and I thought one of the other interesting things, you hit on it earlier, they're involved in so much. Their product type and their assets under management as of the end of March, I thought was actually pretty interesting. Of their product type, 52% of them are of their assets under management in equities, 29% are in bonds, 8% are in multi-assets, 8% in cash management, 3% is in alternative investments. So they're pretty spread and they're not exposed to one massive swing in one sector or another. They have the assets under management to withstand a blow in one of the sectors, and especially to shift funds from one area of weakness into the other, like they did at the end of Q1.
That's that's why you diversify, kind of like a bank. You have some short term, some medium term, some long term investments. You don't do 10 plus year of US Treasuries at historically low rates and go all in on that.
That's right. That you definitely wouldn't want to do that now, would you? Going back to this famous chart that we keep putting up here from BlackRock's earnings release and their supplements that go into it. They also show who are their client types and who are their styles. From their client type, 57% are institutional investors, 10% are retail, and 33% of people are in these ETFs. So they break out the retail individual stockholders and then ETFs, and it just shows how much are in there. So the question I would ask is, if they have that much in institution, how much ETFs, how much of these people are active investors, or how much are just setting forgetting, which would lend them to just the funds staying in there during these times where cash is flying out in different sectors. Luckily, that's in the chart too. 27% of the people are active investors, 32% are index investors. Oh, 33%. Oh no, yeah, 33% are ETS and 8% are, so they have a lot of people that are in that set it and forget it bucket there, which bodes self to keeping funds in BlackRock, which also kind of corroborates that whole net inflow chart, a stat of 110 in the first quarter. Talking to my hands a lot today, Lanny.
A lot of he's trying to be Italian over there. So the question is this a great dividend stock to own? Is this a good dividend stock to buy right now? How do the dividend stock metrics hold up? Again, guys, let us know in the comments already before we dive in. If you own BlackRock stock, again, BLK, between this, T. Rowe Price, and a few other asset management firms, I know that there was a lot of buying when they were really beat up in 2022 and maybe some parts of 2023. So, Bert, you really want to start diving into BlackRock's dividend stock metrics if this is a dividend stock to buy right now.
Let's do it by looking at our screener, which has 3 metrics and a bonus metric: 1, PE ratio less than the S&P 500; 2, payout ratio less than 60%; 3, history of increasing dividends; and number 4, that bonus dividend yield metric. We're talking, yeah, it's damn true. We're talking as of May 23rd is our close price. We're recording it as a Tuesday evening. Let's talk. First metric, their price was $661.53. Forward earnings per share are $35.04, according to average analyst estimates. That gives you a P ratio of 18.88. So,
hey guys, I mean, again, not a cheap stock. We've had the videos about my Elevance Health ELV in the 450s, but BlackRock's in the 660s. So hopefully you're on a brokerage that allows you to buy partial shares. I know Bert is.
Yeah, so if I wanted to, I could add a quarter share for much less. You can build up into a larger share if you don't feel like just putting the wallop in and buying one full share.
The whale.
Yeah, it's interesting though that everyone's forecasting $35 earnings per share. And just to pull out from that first quarter earnings release, their Q1 adjusted earnings were $7.93. So that's a little higher than if you annualize that first quarter earnings. They're expecting earnings to pick up here in the second half of the year for BlackRock. So I thought that was just an interesting little nugget.
I think it is a little interesting nugget right there, guys. Bert, so an under 19 PE ratio.
Yes, not the cheapest.
Not the cheapest, not the lowest, probably higher than T. Rowe Price, but not saying that they're apples to apples to T. Rowe with the game that they play in. But let's look at, again, the dividend yield, right?
Yeah, let's look.
They pay a pretty big dividend.
Yeah.
It's $5 per share per quarter, or $20 per year, guys. So $20 is their dividend. Again, it's all commensurate with the size of the stock.
Yeah.
But based on their earnings of expected of $35, they're at about a 57% payout ratio. So climbing towards that ceiling of 60% that we'd like to see. But again, with earnings per share kind of, compressed right now with asset prices going lower, the payout ratio being higher makes a little bit of sense.
A good segue into dividend growth, because their 5-year average dividend growth is 13.6%. They've increased for 13 years. But as you said, if earnings are a little bit lower, you'd expect lower dividend growth, especially as that payout ratio creeps up. And that's exactly what happened to start 2023. In January, they only announced a just over 2% dividend increase, so far lower than their 5-year average growth rate. And it was in line with T. Rowe at the time, who's kind of warning everybody that dividend growth was going to be slowing in 2023. BlackRock did the same, and many companies have followed suit after.
Yeah. I mean, again, kind of makes sense. It's kind of very, again, understandable with kind of what the industry has done, what the stock market was down, in 2022 by quite a large amount. Obviously, we're seeing a little bit better progress into 2023, but we probably won't see if everything finishes positive and they have growth over there. Again, you may not see something until Q1 of 2024 related to the dividend. So if everything stays kind of how it is, being up this year, I could actually see a better increase coming in Q1 of next year.
Yeah, so that last metric, the yield, we teased it at the beginning of the video. Their yield is 3.02%. So it's always an eye-catching number when Blackrock crosses over that 3% threshold. That's kind of what caught our attention going into this. So you have a 3% yield, a larger 5-year average dividend growth rate that's double digits. And although it was smaller this year, the company trends towards that 10% plus dividend factor, which adds in the dividend yield and the average dividend growth.
Yeah, guys, you got to like it. Again, down 7% this year, one of the largest, echelon of asset management firms right now. It's a great dividend stock. Are you buying Bert right now? I know you own T. Rowe Price.
No, I'm not buying, but I'm definitely going to keep watching to see, especially as what goes on with the market over the last year, especially if we've seen dividend cuts elsewhere. We going through this, you want to kind of flock to safety in companies like that. BlackRock is one of those companies. If you're a beginning investor and you're looking for that foundational stock, but you don't want to just pick it into one company, you want to get one in the asset management sector. We obviously own T. Rowe, but BlackRock would be an excellent foundation stock if you want to build into the sector. You're not sure where to start, and you want to start slowly accumulating that position.
Do you own any iShares ETF?
No, I sold my iShares ETF. I had
Oh yeah,
ITOT, and that's what I moved into SCHD. I did though, and I mean, I log into Fidelity. That's the first thing that pops up on the banner is ITOT's industry leading low expense ratio of 0.03%. So they're very competitive in there. And if Fidelity is advertising it, that's just this. You can see how BlackRock gets in there, gets into this position.
Again, let us know if you guys not owned BlackRock, but let us know if you own some iShares ETFs in the comments below. If you guys haven't already, definitely subscribe to this channel. Let us know what you think of BlackRock stock. Is this a dividend stock to buy right now during this possible looming recession? The potential future Fed increases could still happen. It's still on the table. A lot of economic data is still yet to come, which could also move and shake the BlackRock stock.
And if you have not already, subscribe to this channel, give this video a thumbs up, and just remember, if you're not with us, you're against us.
That was Bert, the Hurt, and Lanny from the Dividend Diplomats. Over and out.